India's weightage as far as the MSCI Standard Index will now go up well beyond the 15% threshold.
The next, in a way, target, or so also becomes a support naturally, is the 21,450 kind of level. 458 is the exact level. This is a 40-day exponential moving average.
If you looked at the internals, it's actually good for industry because core inflation is down to 3.6. That's a multi-year low.
But the better news was that the e-auction premium to FSA, that spiked up on a quarter-to-quarter basis.
Not sure how strong would be their ability to retain the customers in the overall ecosystem.
We've got the Nifty opening at about 21,650.
Jefferies, they continue to maintain their buy rating with the target price of 725.
RBI itself is hinting to the market and to the banks that they need to slow down a little bit.
After a slow start, things have picked up for our market.
Last just couple of days, it has made that stride and moved towards the 20 lakh crore market cap levels.
M6 has been in focus today, and it's not for a good reason. The commodity exchange has failed to start trading at its regular time of 9 a.m.
Now, the vigil has been stepped up not just within Delhi, but also in the states of Haryana, Rajasthan, Punjab and Uttar Pradesh.
Substantial recovery from the lows, but mid-caps, they continue to be under pressure.
Well, that was a day so far, and it's a much more orderly kind of day after the complete mayhem that we saw yesterday. You're with us here on Closing Bell. Last hour coming up. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema and Surbhi here, and Nigel is joining us from the newsroom floor. Guys, good afternoon.
Hi, folks. I guess it's a better day for sure. Largely, if you're looking at the large cap screen, but mid caps are some uneasy calm, but no red, like you say.
No red and a little bit of green, right? And tentative, really, is how you describe it. The Nifty at higher levels is facing a little bit of selling pressure, and I think it's been sort of not being able to hold. I think at one point we were up 150, 160 points, a little bit of sell-off, once again higher. And that sort of pattern of one day down, one day up continues. I mean, just map the last 5 days and you'll see what I'm talking about. Friday on Thursday, Monday on Friday, and of course, today over what happened yesterday. So no real follow-through, day two action is kind of missing. And that leaves us in a bit of a quandary about the near-term direction as far as the index is concerned. Just a few points before we go any further. Broader markets are off the lows, and I think that's been the focus. The CPSE index is up about 1.5% higher the last I checked. Although there is a little bit of profit taking, not a little bit, actually a fair bit of profit taking in many stocks, earnings or otherwise, which is still going on, and we can talk about some of the individual names in a bit. And for the Nifty Bank as well, it's again the problem of no day two. So yesterday we saw a sharp sell-off in the Nifty Bank. It looked like the low of 44,429 would come into focus. Well, no longer. We are up about 1.5% in the Nifty Bank, which basically means that we are now talking about the upside level, which is 45,830 as of yesterday's close. That's a 20-day moving average. And the question whether we'll be able to take it out on a closing basis and of course, I mean, get there first, really speaking. So that's the market picture for you. Very disaggregated kind of move, but also much more settled and orderly as compared to what we had yesterday. Reema.
Well, it's ICICI Bank and now even HDFC Bank, which is fighting for the banking universe. In fact, HDFC Bank started the day absolutely flat, but now is up close to about 0.9%. And ICICI Bank has been a big contributor. Today is also the day that Reliance Industries hits that 20 lakh crore in market capitalization. Reliance Industries has come off from the day's high, nearly 1% off session highs, but still up close to about 0.8%. But I think the disappointment is on the mid-cap universe, right? After yesterday's collapse, you would have hoped for some bounce back. The advanced decline, the index is flat. The advanced decline ratio is still negative.
Well, I guess, Reema, it's not very surprising. And perhaps, I would say that this is probably more orderly, to borrow Prashant's word. Because to get an immediate bounce back after such a huge fall, a huge shakeout is probably maybe asking for too much. I just want to play out the divergence that we're seeing on the PSU side of the market. So, for instance, you still have stocks which are seeing cuts, which are seeing more profit taking. NBCC is one of them. SJVN that came out with really uninspiring numbers. That's continuing to be sold down about 5%. There's MMTC. SAIL is down because it had problematic numbers as well. You can argue, actually. Nigel was telling us at least operationally, perhaps it was not that bad. But anyway, so these are the stocks that are down. The market is now trying to get a little more discerning with PSUs. Pull out the railway PSUs now. IRFC, which also had bad numbers, but for what it's worth, the market wants to keep the faith going on railway stocks and on select PSU banks. So look at what's happening there. This is where it's been a buy the fall or buy the dip kind of a strategy that seems to be at play, because the market feels that maybe railways is where capex will continue to be strong and maybe earnings will catch up sooner and not later. So this is one pocket of it. Other than that, if you're looking at the mid-cap screen, as I said, some of the PSU banking names, PNB for instance, and anyway, I mean, there's the index addition thrust that's helping it 4% higher. You're seeing some other names like Bank of Maharashtra. So these are some of the ones that are managing to find takers. But I guess, Nigel, just to go back to what I sense, it's a bit of an uneasy calm before players can say that all's well, go back to the party on the mid-cap and small-cap screen.
Yeah, I guess so. Some kind of consolidation wouldn't be such a bad news. And I think there is some kind of rotation that I mentioned yesterday as well. Maybe some money moving from the broader markets to some of those large cap names which are available at good valuation. I just want to pull up one stock. BLS e-services shares, listed on the day of listing, it went up big time. It went close to around 350, 400 rupees odd. It hit a high of around 420 rupees. And take a look at that one. BLS e-services shares, the chart should come up for you. 420 just a few sessions ago. Today, 308 rupees. So if you got it in at those highs, then you only got yourself to blame, because there was some euphoria that played out on listing on that one as well. Well, let's find out how to trade the index, because at least the Nifty is doing quite well. We're still up 120 points. Ashish Kayal joins us on the show. Hi, Ashish. Good afternoon. Good to see you in a volatile trading session. But at what point of time would you become quite optimistic on the Nifty's prospects of scaling higher? As of now, we're still holding with a century of gains.
Hi, afternoon to you and all the viewers. If you look at index, if you look at yesterday, there was a sharp selling that we saw, a huge cut. Today, again, trying to recover from that. And it has been a route. If you look at every alternate day, we are seeing a positive and a negative close. So having said that, I think essentially the overall broader market and the Nifty index is stuck in a range. Nifty has a very important hurdle on the upside at 21,840. And on the downside 21,550. Now that's the broad range within which we can see a lot of volatility is happening, and the swings are very big. If you look at today's low, from today's low we have recovered nearly around 200 points. So there are big swings, but essentially within the range. Having said that, I think if we are able to break above day's high around 21,780, then we might be headed upside towards the upper end of the range towards 21,840. So that can be a very short-term trade that I might look at. And on the downside, I'm going to keep a very close stop loss, which is going to be somewhere around 21,660 level. So as long as 21,660 followed by 21,620 is intact, I think we can have some kind of a buying opportunity here arising for a move towards 21,840 levels.
Okay, and Ashish, do share your picks, individual stock ideas as well.
The first stock pick is going to be SBI Life. We can clearly see after 3 days of correction, SBI Life has formed a very strong bullish candle, giving a reversal on the upside. The volumes have picked up decently well. So SBI Life, there is a possibility we can see the higher targets of around 1580. And one can maintain a stop loss of 1420 on the downside. And the next stock on the buy side is going to be HAL. And we can see that the stock is moving in a broad range. It managed to protect that 2790, 2780 levels, which is very important support, showing bounce back from there. And I think the stock is going to be headed towards on the upside, which can be around 3140 levels. So one can create long positions in HAL for 3140 as the target, and stop loss can be 2815.
Thank you very much for that. By the way, look at Arvind Fashions. Reported their numbers about 10-15 minutes back, and the stock has been all over. Initially, the stock went up close to 7% on the back of its numbers, and then there has been this fall of 5%, and from the day's high, close to about 10-15% on Arvind Fashions. And to recap the numbers for you, a top-line growth of 4.9%, EBITDA margins have expanded to 12.7% versus 10.4%, and profits are up 14%. But there has been that sharp intraday volatility that we've seen in Arvind Fashion. But Nigel, Hindalco is clearly the stock which has taken it on its chin. You were telling us in the morning that it's the Novelis' capex plan which has hurt sentiment today.
Let's break it up into three parts, Rima. First, the India operations, then Novelis, and what disappointed the stock. First up, the numbers that just came in close around 45 minutes or so ago. That's the India business. So there are no worries. I'm looking at the downstream and the upstream aluminium business put together, and it's looking absolutely beautiful. There is growth both on a year-on-year as well as on a sequential basis. So that number looks very, very good. The power and fuel cost on a year-on-year basis is sharply lower. Even on a sequential basis, it's down close around 4%. And we know it's a power-intensive business. So that cost seems to have played out for them, because LME prices, well, they're determined by the globe. The copper business as well. Out there, the TCRC has held them in good stead, because out here you have the EBITDA number that's coming at around 650 crores odd. We had an estimate coming in from Kotak. They were working with around 550 crores. So you put both these two numbers together. That's the aluminium as well as the copper business, and it's more than 3,100 crores. Kotak had given a reference point of around 2,600 crores. So that's a 20% beat on the India operations. And the sweetener has come in because the consolidated debt has come down, which tells you that on the India business, there's been some repayment out there. So India piece, beautiful. Novelis's numbers are pretty much in line. The EBITDA per ton came in at around $500 per ton, and they're guiding for around $525 per ton in Q4, and they're talking about $600 going ahead. Now, the problem pocket has been the capex that they've laid out. At Novelis, they have the 600,000 ton plant that they are going to be commissioning the next couple of years. And earlier, they were talking about $2.5 billion of capex out there. That's been upsized to around $4.1 billion. So that's a 60% increase. And they've also said that, the commissioning will be a little bit delayed. That's the big problem pocket. The street doesn't like capex getting upscaled, particularly to this level. Brokerages, Equerus, they maintain their positive stance, but they're highlighting that the IRR on this project will get diluted to 10 to 12% from around 17-19% they were assuming earlier. While Incred, they are the counter view on the stock. They said that if this news is read negatively, then go in there and buy the stock. So those are two opinions that we got from brokerage houses. Sudeep Bandopadhyay joins us on the show. Hey Sudeep, you heard what I had to say. India business superb, Novelis par for the course, disappointment has come, higher capex. The street doesn't like it. They've increased capex by close to $1.5 billion, and they've lost $2 billion of market capitalization. What's your take on the stock at around this level?
You're absolutely right, Nigel. I think India business is rock solid. Utkal has been performing for them consistently over the years, and I think that's a gold mine they have. The Utkal's performance always had been fantastic, and that is one thing which always helps Hindalco's performance. So domestic business, absolutely nothing to complain. And the Novelis, I think, everything is fine, except, as you rightly said, that, sudden, kind of scale up of capital expenditure to this extent definitely does worry the market. And remember, Novelis is completely downstream. There are a lot of challenges which can come. And the margin, whichever they had estimated for setting up this plant, the IRR calculations, everything goes for a toss. So a lot of uncertainties and a huge challenge as far as Novelis part of the business is concerned. So obviously on a consolidated basis, the market is worried. And that's what we are getting reflected in the market today. So I would say let things settle down. Once it settles down, then probably it will be worthwhile looking at this stock. It has corrected already some amount today. Maybe there'll be more correction, and then it may be worthwhile looking at this stock, considering the sheer strength of the Utkal Alumina operations.
Sudeep, have you looked at this company called Jyoti CNC? It's a manufacturer of CNC machines, I think the 10th largest in the world. The stock listed less than a month back, sometime in January. The issue price was 331. It had a steady listing, but since then the stock has been climbing, and now it's at 587, an 87% increase from the issue price. Pull up a 1-month chart and you would see the stock has been trading for less than that. Have you looked at this company and its opportunity potential?
I have, Rima, I looked at this company. In fact, when it got listed, we did look at that stock, and I think it's definitely a stock worth looking at because it's got a global, positioning. But having said that, the way it has moved up, I think at current levels, I would be a little skeptical in recommending this. It's a good company. Let's wait and watch for a few quarters more of performance on the listed space, and then only we can take a call. But definitely not at this kind of valuation based on the numbers which we did see at the time of the IPO.
Okay. By the way, getting Ichimoto numbers there, the top line looks good, slightly ahead of our poll as well, actually more than slightly, a beat of over 100 crores coming in on the top line, and EBITDA seems to be ahead of estimates as well, and stock is reacting quite well to that. So that's the revenue line. We'll just put up the EBITDA margin as well. Of course, in the last couple of sessions, we've seen some cool off on auto stocks, two-wheelers included. We all know the slam dunk on Hero Motor yesterday. Eicher is, of course, facing, having a better run. Profits above estimates as well. Sudeep, quick thoughts. Two-wheelers between the trio. Which stock would you still back if it comes to allocating fresh money?
It's very difficult, Surabhi, to allocate fresh money at these levels. But if I have to allocate fresh money, I will still go for Hero MotoCorp on the basis the fact that I think there will be a lot of excitement as far as rural markets is concerned around the election time. And in an election season, I think Hero MotoCorp definitely shows good sales. And obviously we know they have a significant rural presence. So I think I will go for Hero MotoCorp. It doesn't take anything away from Bajaj, which is doing fantastic. They're the higher end of vehicles. That's where their focus has been, and they're doing very well there. The only challenge for Bajaj was the export market, but I believe that also is picking up as things stand. And probably we'll see a pleasant surprise as far as export numbers are concerned in February. So Bajaj definitely looks good, but if I have to pick one, I'll go and pick Hero Motors.
Okay, what we'll do is, Sudeep, stay with us. We'll take a quick commercial break here. And maybe before I take that break, just sort of highlight a few more names, right, which are moving very strongly in this market. Put up Oracle Financial Services, the intraday, 6% higher. That one, I think, after the earnings has done phenomenally well. So in December, it closed December at 4,200. That is, a month and a few sessions. It's at 7,600. I think in the IT services space, this is probably the number one, and by far the best performing name. Reddington is up about 9%. Reddington has been doing well over the last two months now. Borosil Renewable, we had the flash, the stock flashing at the bottom of the screen, 8%, 9% higher. We just had the management a few days back with us. You got Yatharth Hospitals, a fairly recent listing, which is up very sharply. I mean, this month it's up 25%, and it's up 9% right now. 361, which is the wealth management business, that's up about 6.5%. And of course, Rima mentioned Jyoti CNC. Advanced Enzymes is another one, which seems to be have a new lease of life, and it's been moving up consistently over the last couple of months.
There's just one more stock. Reddington has come up today, and it's up 7%. Tomorrow, it's the listing of its peer, Rashi Peripherals. But the difference between the two is both of them are distributors. But Reddington is much larger in size. They have an export presence. And Reddington does IT hardware, means your laptops, motherboards, CPUs, but also consumer electronics, which basically means your mobile phones. And the company which is getting listed, Rashi Peripherals, also a large company, 9,500 crore in terms of a top line, but it caters only to the IT hardware. It does not do mobile phones. And ahead of its peers listing tomorrow, you are seeing a lot of buying coming through in Reddington. By the way, BHEL's Q3 numbers also flashing for you on your screen. Revenues are up 4.6% at 5,500 crore. Okay. We'll get into that.
And there's a loss,
big
right?
loss, 163
crore loss as compared to a profit of 31 crores. And high interest name, really high interest name, and such sort of opinions on both sides. People like Kotak Equities kind of arguing the fact that no matter how you can build in the most bullish kind of forecast, and you can't justify the price, and there are enough people on the to take the other side of that trade as well, saying that this is a business which will look up, because for the next couple of years you will need a capacity addition on the thermal side as well. So there is a bit of an upcycle happening here. But these are numbers for the quarter gone by, and they don't look all that great at all. Stocks down about 6.5%. More on this with our research analyst in a bit. Sudeep, of course, is with us. We're back.
Okay, well, as we've been telling you, lots of numbers coming in on the capital goods side, BHEL, and that loss is what we were just looking at. Siemens also came out with numbers. Siemens numbers look good. We do have Vivek in with us to talk about some of these. Vivek, so go with Siemens first.
Well, you're absolutely right. So what's actually happened in the quarter gone by has been the fact that a lot of these MNC capital goods companies have actually surprised positively across all metrics. Cummins was the first one, very good set of numbers. And now when you're looking at Siemens, again, it's a clear beat across all of the parameters that we were anticipating, and especially if you're comparing it to the CNBC-TV18 poll. So let's have a look at the numbers. Revenues coming in quite strong over the 4,825 crore mark. EBITDA, again, 596. Our poll threw up just an expectation of close to 560 crore. Margins at 12.3%, a slight beat of 30 basis points to our expectations of 12%. On a year-on-year basis, remember, margins have dipped. There have been multiple factors that we've been highlighting, especially given the fact that raw material prices and also the revenue mix that the company was working with. Lastly, profitability, again, good beat against our own poll, over a 10% beat. On the back of that, it's a very good set of numbers. So what's aided, this particular performance? So let's look at each segment individually. Energy revenues, have dipped on a year-on-year basis, but the rest of them, the smart infrastructure revenue segment, has done extremely well, over 21% revenue growth on a year-on-year basis. Mobility revenue up 72% off a lower base. Digital revenues, again, up over 33%. Auto inflows in the quarter gone by up 10% on a year-on-year basis, coming in at 5,971 crore. So the derived total order book that the company currently stands on is quite strong, over 47,000 crore. This includes, remember, the over 20,000 high horsepower mobility segment order that Siemens won. Now, what is it that the management is saying? Management, after a while, you're seeing very, very good commentary. First thing, they're saying that the order income growth came in from the energy segment, largely led by the transmission business. Decline in newer orders have come in the digital industries as well as the automation business on account of destocking. Lastly, they're talking about CAPEX. CAPEX demand, number one, public infrastructure continues to remain quite good. And what will be music to the industry's ears is the fact that they are saying private CAPEX is also beginning to pick up. So very good set of results, very strong commentary. It'll be interesting to see, given the fact that the stock has already run up quite significantly, whether it can move up higher even from these levels.
Okay, all right. Thanks a lot for that. Vivek, and filling us in with those details. Sudeep, what do you have to say with regard to these numbers?
I think very good set of numbers, Nigel. And what I take it from the management commentary is they are saying private capex has started picking up, and I think that's a very, very good signal for the entire Indian economy, and that is the best takeaway from this result, I would say. As far as Siemens is concerned, the performance has been rock solid, and the order book is very strong, about 47,000 crore. The way they are poised, I think next few quarters are also going to be good. They are and should be focused on the margins, because a little bit of disappointment on the margin is what I would say. Otherwise, it's a fantastic set of numbers. Price has moved up quite a bit. So for a long-term investor, even now, I think it's good. But if you are looking at short-term, I think immediate major upside is unlikely.
Okay, all right. Sudeep, we'll leave it there. Thank you very much for joining us. It's a pleasure having you with us here on CNBC TV18. I think we have Rupen Rajguru now joining us from Bank Julius Baer. Rupen, great to have you with us here. Good afternoon. Appreciate your time. Talking to you on a day, on a Tuesday, if you were talking yesterday, the mood was very different. I'm not sure if it's all okay, but I think people are a little shaken after what we saw yesterday. But the fact also is that the run-up was, in a way, in some pockets, unnerving, right? So just to start with that, do you think we had reached euphoric levels? Do you think in the near term there perhaps is there's a case for a little bit more of a cool-off, a pullback, some time correction along with some price pullback as well in the broader universe?
Yeah, hi. Good afternoon, Prashant. And yeah, thankfully I was not there on your channel yesterday. But nevertheless, so if we look at it dispassionately, right? Everybody was expecting some bit of correction. Everybody was not comfortable with the way some pockets of the markets were moving, right? Like moving up 30-40% in a month. So many stocks, and so not only stocks, but the themes, right, were moving up significantly. And such kind of shakeouts are important in the market because, definitely then the sanity comes in, right? Because ultimately, when any segment gets big moves, a lot of retail investors do get sucked into that theme. So it's better that, reality check kicks in. So net, probably that segment of the market, which probably, like say, public sector enterprise, or the small, mid, and micro cap segment, there clearly we are seeing some bit of frothiness. And just to give you one ratio, the ratio of volumes of NSE 500 to the Nifty is probably at its all-time high. What does that indicate? A lot of action is happening beyond the top 50 stocks. And that is where, one has to be careful. So to answer your question, while yes, when that correction happens, nobody likes it, but everybody wants a correction. And probably it would be a good thing even in the market if we see corrections like what we saw yesterday, because such kind of shakeout is required. And I think that shakeout happened in the segment which had gone up the maximum. And I think that was warranted.
By the way, I was just poring over the BHGL results, trying to figure out where this loss came from. And well, there are no exceptional items that one can see. It's not some one-off settlement of some wage arrears, nothing like that. It just seems to be higher expenses. I mean, their other expenses are high, finance cost is high, the cost of raw materials is higher than the same period last year. And all of this put together has led to this little hole in the, not little, slightly big hole, 160 crores in the bottom line. But for what it's worth, the loss is lower than the September quarter loss. Even in September, they were in losses. And that continues in December. Stock is recovering a bit from the lows. Rupen, hi, good afternoon. Now, weigh in on this, right? This is typically tail enders are not the prettiest of numbers, and that has held true for a lot of PSU stocks, IRFC, SJVN, BHGL coming out with a loss right now. And this really spooked the market yesterday, though today a lot of the dips are getting bought in the very same stocks. How would you analyze this, and how would you approach this PSU universe, large PSU stocks?
So hi, afternoon, Surbi. So one of the key reason why PSU as a pack has got re-rated. Now, if you recollect 3 years back, there was extreme undervaluation, right? A lot of these stocks were available at between 5 to 7 PE multiple. And then in last 3 years, they have got significantly re-rated. While earnings have not done that kind of acceleration, but the stock has gone up 3, 4, 5x, and some of these are now trading at 25, 30 multiple. What are the key reasons? Why have they gone up? One, the government balance sheet is extremely strong, and that helps them to do capex. That helps them, in a way, a lot of these PSU get their order book from the government, right? It's B2G. And basis the order book, I think market has given a assumption that there will be complete smooth or seamless execution. And I think one of the example which you just cited, while execution is there, but whether it's execution is happening on a profitable way or not, that's a big question mark, right? So hence that reality check, like what we are witnessing, is important, right? Because you can't just keep on bidding up the stock basis the order book. And the second and the other important reason why these stocks have gone up is the overall system liquidity has been strong. I think the capital raise has been easy. And some of the stocks, not all, some of the stocks have extremely low amount of free float. And that's where a lot of speculative elements are there. And I think that one should clearly stay away from that segment. So I would say the way I would approach these things is that, from extreme undervaluation, first it went to parity, and now there is clearly overvaluation. So I would say on a case-to-case basis, we see that what kind of profitable growth these companies are displaying. If it's just order book without profitability, it doesn't make sense to be in those stocks.
No, but Rupen, the thing is, I think we're in some sort of a very different alternate market. For instance, Nigel has been always cautioning us about the low float PSU stocks. But Nigel, what say? This is a market where HDFC Bank misses the margin estimates by a few basis points. It gets thrown out. You have Hindalco saying, okay, capex is going to be higher. The stock is rogered. You have IRFC coming out with a weak performance. You have another PSU with the losses. The correction lasts for 1 day at max. That's the market we're in, right?
Indeed, there's no room for error, for some of these other companies like HDFC Bank as well as, Hindalco, as you mentioned. Rupen, let me ask you about this capital market intermediaries. MCX was under some pressure. You have NSE that came out with their numbers, and in fact, that looked quite impressive as well. And there have been themes that you liked in the past. So, a quick comment out there. And also, on this travel and tourism, I'm going to get a nice interview with one of the leaders in this space that will play on the channel in the next 5 days or so. But what's your view on both these two spaces?
Hi, afternoon, Nigel. In fact, both these two are, I would call them a big emerging theme for the country. Because one thing, while we might all on a daily basis debate about the way the market is going, whether it's going up or down, or what theme is working, what is not working. One thing is for sure, the overall activity in the capital markets have gone up significantly. Today, we have close to, I think, 14 odd crores a demat account. We have close to 17 odd crores, or rather recently it was 18 odd crores of mutual fund folios, right? And these have gone up, multiplied significantly over the last few years. Secondly, the overall activity in the capital markets, be it the volumes on the cash side or be it the volumes on the futures and options side, have gone up significantly. So how do you capture these, right? So I would say themes like exchanges definitely is a brilliant theme, and I think they capture, because ultimately for every volume which anyone does it, there is a share which the exchange gets out of it. So while there is transactional income, while there are R&T companies or they are depository participants, so all these get a share of annuity as well as a transactional income, and I think that a lot of people are also focusing on share of annuity, and plus more and more avenues of income are coming through. There is like account aggregators, which is there. A lot of these companies are getting into that. Insurance demat, a lot of private sector companies are going to get into demat. So these are other opportunity features there. A second leg of that is, I would say a lot of the companies which, like, be it brokerage companies, asset management companies, or even wealth management companies, all of them do get benefited by this entire financialization of savings, or I would say massification of equities. So as a theme, how do we ride this theme? Because we all are positive on capital market. We all are doing a lot of activity in the capital market. I think this is a theme which clearly we believe for next 4 to 5 years will be a big theme from an Indian market perspective. And quickly on the second part of your question, which is on tourism, I think this current government and the current prime minister in particular is very clear that India is a country which has probably the beaches, it has mountains, it has deserts, every possible thing which a tourist can look into, it has it. But I think one thing which was lacking is the infrastructure, right? And I think that slowly and surely they are trying to fill in that gap. So we already know that Statue of Unity probably commands the highest ever tourist spot. Religious tourism is something which is a big market which probably has not explored clearly, and I think with the launch or now with the new temple in Ayodhya, we expect huge amount of tourism happening there, and I think the religious tourism will pick up significantly. So tourism is clearly a big theme, and the companies associated with tourism, be it on the hospitality side or be it airline companies or some of the other companies which are linked to tourism, definitely will have a very good business outlook for next 4 to 5 years at least.
So it's not just the hotels. You're open, you would even consider, say, a company like Interglobe Aviation. Even in the aviation space, you would be interested, and particularly on hotels. Would you go with the market leader like Indian Hotels? Or there have been some new listings like Sami Hotels, which owns Marriott, or The Park recently got listed yesterday. How would you view Indian Hotels versus some of the smaller ones?
So hi, Rima. So see, in any a theme which is emerging, it's always good to have the leader first, right? Because the biggest beneficiary, the pricing power, the brand will always be with the leader. So in fact, the incumbent leader here itself is increasing its capacity by 50% from 20,000 to almost going to 30,000 rooms. So it's important that would be a core portfolio when you want to play the theme. And what happens that whenever that valuation of the leader goes higher or significantly higher, there is a lot of catching up happens with the second tier hotels. So some of the names which you mentioned, right, they are purely basis the way the differential it has between the leader and the kind of some of the quarterly earnings or the earnings outlook they give, the stock kind of does tend to give us opportunity out there. So I would say as a core, one should have the leader, but as a satellite, some of the other names, one has to be very actively tracking those names, and those would be something which might give a higher return in a short period of time, because the leader always is will be a slow mover, a steady mover, but some of the smaller names will have a much more action depending on their quarterly earnings and the kind of commentary they give.
Rupen, thank you very much for joining in. We just want to talk a little bit about Paytm because that continues to trade under pressure. This is after the big downgrade from Macquarie. Earlier today, we chatted with Macquarie's banking analyst, Suresh Ganapathy. We also chatted with Axis Bank's MD and CEO, Amitabh Chaudhary, on his stake. Listen in and we'll be back after this short break.
Their ability to monetize the data comes into serious question, right? The feedback that we have got is that they are curtailing business. One lender, which is of course there in the public domain and which is there in the latest analyst conference calls, is also Aditya Birla Capital having cut down their exposure significantly to Paytm. So my point here is that if at all the lenders decide to go back on cutting down their exposures to Paytm, then clearly the business model is in question, because that's the biggest profitable business for them.
Let's say the merchants of Paytm were onboarded by us. We have to and we will insist on doing individual KYC. Now that cannot be done, for example, by February 28th. So it does need time. So when I say we need permission from RBI, we need permission from RBI in terms of saying that yes, this is the roadmap you can take. We are okay with that roadmap. We are okay with the time you might need here. And we will be watching you very, very closely. But we do need RBI to bless it, because we cannot, just suddenly take over all the merchants and say, by the way, I'll take 12 months to do KYC. I mean, we cannot take that problem on our, on ourselves unless RBI gives us some kind of dispensation. I'm sure Paytm is in discussion with RBI. And depending on what view RBI takes on what has to happen, up to February 28th and beyond, we are happy to work with Paytm. They're a large fintech player. They have a large number of customers.
Welcome back. You're tuned in to Closing Bell, and we are coming to you live from the CNBC-TV18 Motilal Oswal newsroom. Well, I think it's the best time actually for your portfolios as we speak, as we're going to wind down trade, because the mid-cap index has moved into the green, but that's not the point. The point is you pull up the advanced decline ratio. At one point of time, there were 4 stocks that were declining for 1 stock that was advancing. And now we're on the verge of seeing more number of stocks advancing than declining. So in comparison to the morning at least, your portfolio must be feeling much better. But a good time to get in Nimesh to tell us. Nimesh, what are you picking up in terms of flows?
Well, portfolio looking good. The best part is when the PSUs have recovered. Right?
Yes.
The real pieces are up 10-odd%, 10-12%. So a bit of a relief rally, so to speak, in the PSU basket. But broadly, from a market perspective, the sense I'm getting is today's pullback is largely led by the financials. The good part is today the private banks have done well compared to the PSU banks. And there is a bit of interest as well, is what I understand from the flow perspective. So again, while there are better sellers, is what I understand, but still some bit of buying is seen in the private bank names in today's trade. I guess from a technical point of view, this 21,690 is what we've been talking about. That's a very crucial support to watch out for. So that's level has been at least been respected for the time being. So looks like market can take a support from there and see a bit of a bounce back rally. I guess the bounce will largely be in the financials because that looks slightly oversold as well technically. So maybe you'll see a bit of a further pullback in the bank names. But again, while we've seen a bit of a pullback in the broader markets as well, it's not backed by large FI buying or institutional buying. So looks like it's a bit of a relief rally in the PSU's names, PSU stocks in the broader market. But FIs are still better sellers. I guess the only brownie point is that today's rally is largely led by the financial names.
Well, Nimesh, last few days, everyone's been only talking about T20s. But the last couple of days, after this kind of a shakeout, at least people are talking about the one-day international, the test cricket, let's play a longer innings kind of thing. But tell us, individual stocks, what do you pick up?
So in terms of individual names, the first stock on my list is BPCL. This stock is indeed the stock of at least this calendar year so far. Up 30% in the last 2 months itself. But now I understand there's going to be a large block deal in BPCL very soon. So that's something to track there. The second name is Bandhan Bank. I spoke about private banks doing good today, but Bandhan Bank stands out. Stock has actually recovered smartly from the intraday lows today. Largely on a bit of contra buying is what I understand from larger institutions in Bandhan Bank at this level. So that's second stock. The third name is Escorts. While the company actually downgraded the forecast for next year, and we've seen a bit of a correction in that stock. But again, in today's trade, there are better sellers, so expect high delivery volumes on the sell side in Escorts in today's trade. And the last is the 2 Adani group names, Adani Green and Adani Transmission. After a long time, some bit of institutional interest seems to be back. So for the second day running, the feedback is there is a bit of institutional interest. The FIs are back and looking to bid for both these names in cash market. So that's the reason why it's come into my chatter list. Both are seeing a bit of delivery-based buying from the larger FIs in the last couple of days.
Interesting list, Nimesh, as always. So both, there's Adani Green, which you said, and BPCL, Nimesh. So finally, some monetization, likely?
Not really, Prashant. So my sense is the block that I'm talking about could potentially come from the investment trust. They still own 1.5% stake in BPCL, which has been classified as public shareholders. ONGC owns 51.5%, so it doesn't look like they will sell at this point in time. Of course, they're above the cost price now. So, but again, it doesn't look like that the government will sell or ONGC will sell. So, most likely this is going to be a clean out trade from investment trust. I was just looking at the back history. In 2020, they sold close to 4.3 crore shares. Very recently, in 2021, they sold nearly 12 crore shares and raised close to 5,500 crores. This is the last 1.5% stake which is left according to the shareholding pattern. So, looks like that's the entity which is likely to sell out. So it's going to be a clean out trade, and they've done in the past via open market. So looks like it's going to be an open market block which can come very soon. That's the indication that I've picked up from sources.
Nimesh, sorry, the investment trust, it's a private entity? or is it it's a fund or?
No, Prashant. No. So if my memory corrects me, my understanding is this trust was created long back when there was a merger between BPCL and MRPL. Or one of the group companies, and that's where the 10% trust was created. Out of the 10%, in the last many years, the BPCL trust has sold nearly, 8.5. They just left with 1.5% now. So at least I can look at the back history in 2 tranches or 3 tranches. They've sold stakes periodically. So this could be the last clean out trade where they will sell that remaining 1.5%. It's close to 3.3 crore shares. So that works out to, at current price, the deal works out to close to 1,900 crores. Even in the past, the institutions have bought. So it looks like that's going to be a block deal very soon.
That's right.
1.5% is left.
I was just wondering who does the money go to. All right. Thanks very much, Nimesh, for that. So that's BPCL in focus. Ashish Kayal is with us with short-term trading ideas. Ashish, good afternoon. What do you have?
See, the first topic for can be bought as Granules India. We can clearly see the stock has not dropped yesterday also when there was a sharp sell-off in the mid-cap index. And Granules India is now trading near the day's high. So one can create long positions here, aiming for the target of around 450 on the upside. And on the downside, one can maintain a stop loss of around 418. And the next stock on the buy side is going to be Bombay Burma Trading Corporation, BBTC. We can clearly see a very strong run up today. The current candle has actually engulfed past 2 or 3 candles already, and the volumes are also very strong. So looking like that, the stock can move towards the level of 1900 on the upside, and one can maintain a stop loss on the stock somewhere around the level of 1670.
Okay, all right, Ashish, thank you very much for all of the details over there. By the way, you should look at the mid-cap index because the flare seems to be back. The index, which was struggling pretty much all throughout, was at the flat line, is now up about 0.4%. And you finally have a more even Steven advanced decline ratio as well. So some pickup on the mid-cap side of things. And stocks that are moving higher, well, what do I say? IRFC is back to its old ways, 16 to 17% up on IRFC. There's been a bit of a move on Geo Financial as well in the last few minutes. So it's up about 1.5%. Yeah, the other PSU stocks that are trying to bounce back, Aircon obviously from the railway side. There's REC, there is Central Bank of India. So quite a few of these PSU names moving higher along with this one, Geo Financial Services. That's the market right now. Well, let's just talk about some of the major earnings that we will be looking at tomorrow. Mahindra & Mahindra is one such name. Sonia is here with the key expectations. Sonia.
Well, thanks a lot for that. So the M&M stock has underperformed the rest of the auto industry. In the past 6 months, there's barely been a 5% rise that we've seen in the stock. That's because while the auto sector has done well, it's the tractor sector that has been under pressure. So if you look at the overall numbers, a revenue growth of 17% is what the company is expected to do. The EBITDA is expected to go up by 14%, while profits are expected to rise by 50%. Now, the problem is that despite the auto segment doing well, the tractors were under pressure, and hence it could be a mixed bag this time around. The total volume growth will be about 11.1%, but because of the high base of last year and unseasonal rainfalls, tractors could see a degrowth this time. The net realizations are expected to rise by 6% year on year at a little over 8 lakh rupees per unit. Back to you.
Thank you very much for that. We will slip into a break on that note. On the other side, we'll invite Jay Bala from cashthechaos.com.
Welcome back. Well, a good time to get in Jay Bala of Cash the Kiosk to help us out with some view on the markets as well as individual stocks. Jay, let's get straight to the stocks then. What's the stocks that you're bullish on? I believe Zydus as well as Britannia.
Yeah, that's right, Nigel. And the FMCG index, I've been saying that it's got a pending high to come through, but it's come a bit deep. So it's worth considering Britannia. I've been saying Britannia and Nestle are likely to do well, leaving out ITC. So Britannia's setup there is, it's both these stocks and have a little bit, downsides to work with. But post that, Britannia might recover to all-time high of 5,600. Zydus has got a little more work to do. It's shaping into a very important, short to medium-term pattern. The stock can climb past 1,600. I think it's putting in a medium-term bottom. And and it's likely to go to the highs recorded in 2022. I'm afraid Zydus level is 1,600, or I'm not sure about it exactly. I think it's 900. I'll just I'll look at that and let you know.
The metal sector is critically poised, according to you. Could you explain that? And what's the trade?
Yeah, that's right. Metal sector as well as the small cap index and the mid cap are having a very similar structure. And if the metals index were to break down below 7,400, that will mark a significant trend change and be the beginning of a medium-term correction. So, and so most of the stocks within the space are, have already topped out or beginning to top out. And that's the reason why I'm bearish on JSW Steel and Vedanta out there. And JSW Steel might be the top candidate if 7,400 were given for Nifty Metals Index.
Okay, that is Nifty Metals. Jay, just to talk about the view on any of the PSUs from here on, even if it's PSU banks. I mean, you did mention that SBI, I think, is looking the best of the lot. But would you recommend any fresh trades in banking, given the technical structure right now?
The banking sector remains the weakest, barring the PSU names, and it's PSU within that PSU space. SBI still got high highs to come through, and I was expecting SBI to finish this move around 690, 700, but it's pushed a little higher and still continues to remain an unfinished move. But the fresh highs that I'm anticipating for SBI may not be too far beyond a couple of days high. So that's the reason why it's an avoid. And the banking sector, is likely to break down below the January low of 44,429. Once it does that, it'll seal the deal for the bears.
But this it's been extremely zigzag, right, Jay? No real follow through so far. But you think that it'll resolve on the downside? That's how you're leaning overall.
That's right, Prashant. The markets have been prevaricating and they have not given a decisive breakdown on the frontline indices. But the internals are pointing to an important change. If you look at when we look at the market's movements from how many steps it makes to an important resistance or support, and the key sector, auto, is actually, from an intraday perspective, on the hourly time frame, it's come down in 5 steps. So that's a very important change. That's not happened in a long time. But none of these key sectors have broken down below significant support. But the clues are such that they are likely to break down below the key level. The most important thing for the Indian markets, in my opinion, is probably the 5-year OAS swaps. For the last 2 sessions, it's been holding significantly above the 50-day moving average. And that's a very important signal when it comes to the rate cycle. And the markets which haven't taken notice of an important price action is the German 10-year bonds. The Bunds have clocked a higher high in a long time, and it's signaling that the decline that started for the rates from the October levels is coming to an end, and probably anticipating a higher CPI print for the US markets.
Any thoughts on Reliance Industries?
So Reliance is what is keeping the markets higher up, and I've been saying for several sessions now that the index managers are keeping Reliance up so that they can keep the markets up. So Reliance has got an unfinished move towards 3050. my sense is that it might be the major top for it, but we still need to see the markets clock higher highs for Reliance, and probably in the very short-term time frame, it's likely to pull back towards 29.20 or slightly lower, and then go to record highs. So once that is done, I think the markets will start to top out.
You know, I just want to pull up Taj GVK. What a move it's seeing. I mean, we were talking about travel, tourism, hotels. You know, 230 when we started, stock was at about 310. It's moved 40 rupees higher since. Look at that. That's a sharp move higher on a stock which is already up about 50% in 2024 so far. So that's a very, I mean, people have been highlighting the big valuation gap between Taj GVK, EIH and Indian hotels. And this one, sort of, you know, coming through very strongly. Any thoughts on Taj GVK or any of the other sort of hotel names?
Well, Taj GVK itself is a fantastic breakout, Prashant. You know, it's likely to continue from here on. You know, it's a big breakout on the monthly time frame too. So, you know, I would say, you know, this is likely to see somewhere around 500 plus. But, you know, you should place a stop below 280. That's a very important level, but you know, I think it could be much bigger than that. So Taj GVK is breaking out on a multi-time frame level.
All right, Jay, thank you very much. Good to have you on the show as always. By the way, that's a nice optimistic note to end on. As Vivek was pointing out, industrial companies, particularly some of the bigger global names, they've had a phenomenal run in the quarter gone by, and Bosch continues that trend with a very solid show in the third quarter, and the stock is flying away. But after that optimism, I need to place on board that while we had a recovery today, the Nifty has been making lower lows for 5 consecutive days. So the intraday low is what I'm talking about. I mean, we've had 5 straight days of lower lows. I mean, we've recovered from it, which is fine. But that's usually an indicator that you don't want to ignore. Anyhow, for what it's worth, the Nifty has managed a 100-point up move today, 21,724 back on the board. Bank Nifty was leading it from the front, and even the mid caps managed a slight recovery. But on the large caps, let's talk about where the price action was on the upside. Banks and Reliance, 2 big pillars that powered through for the bulls today. So on the banking front, you've got names like Axis Bank, ICICI Bank, all moving higher, Kotak Mahindra Bank as well. Let's just see where HDFC Bank is. Definitely not leading the party. Yeah, even on a day like today when the Bank Nifty is up and about, HDFC Bank is absolutely flat. So again, something to take note of. Reliance, great move, but then cooled off from the highest point of the day. Still going home with a gain of about 0.7%. And then you had the other movers and shakers like a Coal India. Numbers very well received by the market. UPL has seen some buying from recent close. And then some of the PSU stocks like NTPC, SBI Life. So some of these names are on the upside as well on the screen. That's the large cap space.
Well, I think, you know, lots of moves sort of outside of the index as well. And we can maybe list out a few that sort of saw very sort of outsized kind of gains. By the way, you know, enough PSUs were up and enough PSUs were down. So it's kind of very mixed. So IRFC, NHPC, RVNL, Neyveli Lignite, Central Bank are some of the big volume-led gainers. And some of the big volume-led losers include, I mean, actually on the losing side, there's only NBCC. There's others, but no volumes. NBCC, of course, top volume-led loser in the PSU pack. Otherwise, I mean, Paytm, of course, was another big down day. Started in a tentative sort of note after that Macquarie note, but full 10% gone by close. Something like a KPIT Tech also sold off by close. Again, very large volumes coming through there. I think that's a sort of the market, of course, have closed. We're up
and Hindalco, sorry, I forgot to mention Hindalco from the large cap space. Big newsmaker today as well.
Absolutely, down about 12-13% or so. Well, it's a wrap on this edition of Closing Bell from all of us here. Goodbye, thanks for watching. But Markets Forward picks up on the action in just a bit.